All right. Good evening, everybody. Let's do a quick audio and visual check while I get a few things ready. Let's get everything set up here. Can you hear? Good. Everything's good. Looks good. Sounds good. A perfect barbecue and beer day. I mean, it is Labor Day here in the U.S., so obviously that's why TopstepTV was off. I was not on yesterday as well. But here we are. The markets are now open. It's, a start of a new trading day. The Asian markets are open, and let's get to it. Give me a few moments. I'm still getting some of my stuff set up from a really nice, relaxing weekend. So there it is. Welcome to Slow Markets, everybody. As always, there's our Topstep risk disclosure in the YouTube chat. This is not a signals class. Everything we say and go through on TopstepTV is for educational purposes only. That being said, let's go ahead and jump through it. So we're going to be doing our regular rapid fire. We will review the NASDAQ, crude oil, Nikkei, which is the Japanese market, and then we'll switch over to gold right around 8 p.m. Central and see if there's any other trade setups. And maybe we will get a few maybe slow markets trades. If you haven't been here before, welcome. Let me know in the chat if you are new. I'm really curious. If this is your first time ever being here in slow markets, let me know. I always love to see traders who are brand new. And plus, I actually don't even know. You probably just lie to me, and I wouldn't recognize unless you've been here for a while. I start to notice some screen usernames. Day traders and newbie, welcome. New. See, this is the thing is you guys are saying you're new. Yeah, it is your first time this month. I'm new too. This is the first time this month that I'm doing slow markets. Welcome to yes, welcome. But let's get started. Here is the NASDAQ. Yeah, first time for everybody. Let's do the daily chart. And let's get to it. Here's the daily chart on the NASDAQ. We had a more calm week this past, two weeks. I mean, given that we've had this craziness happen on this huge sell-off, we've kind of calmed down. We're back to normal, and I am seeing a very beautiful pattern that I'm going to be watching going into this week. Let's go ahead, and I'm going to show you a little bit about what I am looking for and what I'm looking at. So here's the daily chart. We had this huge rally off that crazy sell-off. We went all the way up to 20,000, just barely peaked over 20,000, and we've started a little bit of a pullback. Now, a few things when I am looking at this is if you're a Fibonacci trader, that you could draw a Fibonacci level, and maybe you make an argument in saying that this was just a pullback and we're looking for a continuation back towards 20,000, and never know if we break back into those 20,000s and look at to test all-time highs. So that is something to pay attention to. It's something, of course, I'm going to be watching on a longer term point of view. So I don't really use Fibonacci's, but there could be something to that. More of a technical side, and this is something that I like a lot better, is we've had this amazing rally from 17,000 all the way up to 20,000. And now I'm looking at this and I'm viewing this as a bullish flag. Now anything can happen. Anything can happen, and we could, maybe make another rotation back down and test some of these lows, or we go through and make a higher low. That is very possible. And, feel free to ask questions as I'm going through this. We have an amazing moderator, Adju is amazing, where we get these questions. I'll be able to answer some of the questions that you guys have, because some of this will be a little bit more advanced, or it could be. So we've had this rally. We're seeing, maybe a bit of a pullback. We're seeing this consolidation, this bull flag. And so do we see a rotation and maybe make a higher low on the daily, right, where we sell off and we come down and make some type of higher low, maybe 19,400s, 19,300s. That is a possibility. I'm a little bit more on a more bullish aspect, where this is a flagging pattern. Maybe we started to break out. The way that we finished on Friday was very, very bullish. We obviously had this day, I think, what was this, Thursday? I think this was Thursday, where we rallied all the way up to 19,000. We couldn't really get over these 680s, 19,680s. We tested it once, twice, third time on Friday, and then or Thursday, and then on Friday, it looked like it was going to be a very ugly day. I got into, I don't want to say an argument with the chat and everybody in the chat, but kind of a little bit of a debate. So as we start to zoom in, you'll be able to start to see this a little bit better. And this is kind of what that debate is, and everyone has their own points of view. So we had this, we basically had the sell-off, we gapped down, and then we had this huge rally. We hit these, 19,680s. We hit it once earlier, twice earlier, and then here we go. We hit it again. And on Friday, this is kind of where that debate was, where the Asian session, yesterday's close was down here. Like, yesterday's close was all the way down here, right? Around 19,400. And from then, we've rallied all the way up to the 600s. So that was a big move from 400 to 600. That's 200 points. And most of Friday morning, we hung around and we stayed above this. And so to me, I was viewing it as a bullish day, a bullish trending day, because we were moving. It was a very strong, where we closed the previous day down here. We opened this. During the New York session, we started to consolidate at the beginning, and then we sold down. We sold down into these 400s, and we went and tested where we closed the previous day. And we immediately, during the end of Power Hour, as you guys seen, when they were doing that fun reversal challenge at the end of Fridays, we had a big, basically a 200-point rally from the bottom. And sure enough, we consolidated there. And it looks like over the holiday, we went down and we tested, and this was just a few hours ago, we tested these 680s again. So 1, 2, 3, 4 times we've basically hit these 680s and sold off. And so the way that I'm viewing this, and the way that it's looking like, is that we are continuing to make higher lows and we are making equal highs. So this is a pattern. This is a flagging pattern, where are we going to break above? The question is, do we make a higher low and then look to break above these 700s, or at least these 680s, and make a run into these 700s, maybe come up and test these 830s to where we were at on the 25th. These, was it 820s, 830s? That's a very strong possibility if we do break above this. And then, of course, making new lows, making new highs, taking a look at this 20,000 level. Now, remember, this is a higher point of view. This is an hourly chart. This is a flagging pattern. I'm looking at this as a bullish flagging pattern because we've had this huge rally, right? This was this huge rally since the beginning of August. We've rallied all the way up, and now we're getting this pullback that we've seen on the hourly chart that I was kind of, showing and talking about, however you want to go through and make your chart look. But this is just kind of a sideways pullback and a lot of chop. But overall, I think that the way that I'm going into tomorrow, I will be tomorrow during fast markets. My trading buddy rips, and we'll see if we could get some great house account trades and see if we could tear the market up. But yeah, that's what I'm looking at. I'm looking at something like this. Whether you draw it like this, you can draw it however you want. I think at the end of the day, it's just higher lows and equal-ish highs. It's a zone, and possibly looking for a breakout. Maybe we get a higher low here around these 580s to 550s, and then we just break up and run. Maybe tomorrow morning, before we even get a chance, before the New York session, maybe during the London session, when D is on, maybe we are already into these 700s before we have a chance, just like it's been, right? The overnight session, we've been rallying during the London session, and it hasn't really been giving us amazing buy opportunities unless we had that dip. that we had during, basically around noon on Friday was that beautiful opportunity. Oh, what else? I think that's all I'm seeing so far. There could be a possibility of a good overnight slow markets trade to the long side. I don't know if it would be too great of a play to put a buy stop somewhere above here. So that way, while we're sleeping, if we do break out, we could get in and take advantage of that. Or if we get some type of a reversal and put a buy stop somewhere lower so that if we do break out and take advantage of it. I'll go over that after we look at gold at 8 p.m. But let's go ahead and move into the next one. Let's go ahead and take a look at crude oil. Let's see. All right, so Friday, or let's see, crude oil, hourly chart. Man, we did have that big sell-off. Wow, that was quite the sell-off. When was that? Wow, that was not too long ago. So this is Friday, and then immediately just tanked and sold off, and now we're finding buyers. I don't know. I'm not really 100% sure on crude oil. It's a little ugly in terms of chop and the price action. Where I was looking for this to make a, this was a higher low. I was looking for it to make a higher high, right? Where higher low, higher high. We did not. In fact, we made a lower high. We sold off, and now we made a lower low. And so I think we're just in the middle of this mess. And so I don't want to touch crude oil because every single time I look at this, I'm thinking, there's a possibility, and I'm always looking from the bullish standpoint where, could this be support? Can we find support here again? And then is crude going to come up and test these 75s and come up and test these 76s? Maybe. I'm not sure. I'm a lot less confident in crude oil based off that price action. It's very ugly. Yeah, this is just not a great market for the way that I view it. It could be good if you have a different strategy or a different view than I do, of course. But I don't want to play around with crude too much. Maybe tomorrow, and maybe by the end of day tomorrow, there'll be a little bit more clarity. But so far, I don't like it. We're just kind of in the middle. We really are. I'm not really seeing too much of anything that could excite me to either get in long or to get in short. If I do have a little bit of a bias, it would be to the long side, but that's purely probably just me because that's looking like a higher, maybe this is the higher low. I think that would just be me forcing myself for a trade. Yeah, there's no sense of me touching this. Maybe a rotation back up to these 75s, 75.50, but so far, lower, that is a lower low, the way I'm seeing it, a lower low. I'm going to just go ahead and make that one quick. I'm not going to talk too much about crude oil based off of that. And then the Nikkei. Once again, I think the Nikkei is going to continue to play that pattern. I mean, look at this. Every single time I talk about it, sure enough, that's what it is. Buy the dip. Every time we have this sell-off, it's been buying the dip. Sell-off, buy the dip. And each one of these, it's continuing to play out. It looks like we got that Friday. We actually got that yesterday, right? Over the weekend on the 1st, September 1st. So, yeah, yesterday night, it looks like that's the same thing that happened. We had a sell-off, and it was a buy the dip. And I guarantee you, man, this is the only thing I'd ever have a guarantee on, right, is when the market's moving like this, you can expect these average true moves to be relatively accurate. Now, relatively, nothing's 100% accurate, but they will be relatively accurate. So there it is once again, right? You just measure this and say, okay, if we do get a sell-off, when could a possibility be for a entry onto a long? So it looks like it played out again. Now it's just maybe we continue back up towards these 30, maybe we break above 39,000. So I could definitely see us breaking above 39,000, maybe coming up to test these highs. Not too much. I think the opportunity is waiting for a sell-off and then finding a reversal on the Nikkei. And now let's take a look at gold. Tonight's moving nice and smooth. Gold's looking a little bit bearish. Wow, this is the first time I'm seeing gold look a little bit bearish. Let's go through it. Oh, let's see. Just going through. Let's take a look at the daily. Actually, let's look at the daily here on gold first. Daily is looking. Oh man, could we rotate? Is this a rotation? Is this a double top? Could that be a double top? Maybe, right? I mean, if we do break down, obviously that would be the confirmation. If we break below this area of support that we were holding for so long, that we're making higher low, higher low, higher low, higher low. If we break below that, then technically that would look, and that would be a double top, right? That's a double top confirmation if we do break below these. What is it, 2520, maybe 2506? If we break down below 2500, that of course that's going to look even a lot more bearish. Maybe we even come to see these the mid 2400s come into play, and that's from a very bearish looking perspective. If we zoom into an hourly chart, you kind of start to see it already form. From a bear side, just looking at it from the bearish standpoint, yeah, I mean, could we see this just fall off? Could we see these 2500s already come into play where there's a lot of resistance there at 2560s? We did start to break down, and the way that I'm seeing this is maybe we broke below this. This was holding as supports, and this could very well become resistance, right? Support become resistance. And then do we see a test of this level? This is a very, strong level of, this was resistance, it became support. And then do we see it become support again here in the 2515, 2516 zone? Looks like we're already on the move. The past couple hours, we're starting to break down and sell off. A little bit, right? Where we did break through that. We broke through that mess. And now we're starting to catch speed to the south. We're at 2527. We do have 8 p.m. coming up in 10 minutes. And let's watch it. I'm going to let's zoom in a little bit more, and we'll just watch this. Yeah, that was a clear break, right? Where we just clearly broke through this, and it's been straight down. So we'll see if we could pick up momentum to the downside. But yeah, I wouldn't be so against getting into a short, looking for a play of these, 25, 50. I mean, this is a big zone. Basically the teens, 25 teens area, at very minimum, maybe a retest of these lows around 23, which we might be getting there sooner rather than later. Or do we get a reversal back up into these 30s? From the higher time frame, it's looking pretty bearish, but anything could happen, right? Now, let's get to a few more questions. We do have a little bit of time before the 8 p.m. The 8 p.m. Central. I keep trying to say 8 p.m. open, but it's just a spike in volatility from there. All right, so let's get to some questions. Dakota, what's the longest break you've taken from trading in your beginnings? I've taken like a few weeks off every once in, and usually it's during the summer when the market's just very slow. But yeah, I would say a week, few weeks, maybe the longest would be a month, would be the longest I've taken off from trading. What are your thoughts on the long right now on the NQ? I did go over that at the beginning of class. I'm not sure, maybe it depends on the time frame, of course. Would you consider NQ long now? Someone's wanting to really get my opinion on the NASDAQ long. Let me get to some more questions that I've went through and I might have missed. MP tweeted a best challenge. Okay, I'm not gonna entertain that, Richard. I have absolutely no comments on those. To me, it's just so much entertainment. That's people just love attention, right? A boxing match. All right. Any questions in regards to the markets? Come on, guys. Come on, everybody. Less about the social media drama. Less about this. More about trading. Yes, we are here to learn and get better. The drama could be the fun stuff when you're not trading. There's plenty of drama. There's always drama. We're going into, election time. It's fall. There's always drama if you're looking for it. That's what humans do, right? Humans love drama. Would you talk more about using a 100 tick chart? I also use tick charts. Yeah, we could talk more about the 100 tick charts. I want to focus on this gold. We'll see a spike in volatility at gold right around 8 p.m. And then we could dive more in depth about a tick chart, and then we'll see if there's any more slow markets trades. I think a NASDAQ, looking on the long side of the NASDAQ, could possibly be a setup for an overnight trade on this higher time frame, or on a longer time frame in terms of like on the hourly chart, right? Where if we're looking for NASDAQ to continue and maybe test and eventually break through this tomorrow, then, overnight there could be some opportunity to be buying the dip, right? Where, is this a dip that we look to buy? And so far these dips usually have been really good opportunities to buy it, right? Buy the dip, buy the dip, buy the dip. And then of course, when it does not, when the dip keeps dipping, you lose money. But there could be a setup to where if we're using the correct order, right, where we're just not buying it as it's going down, we're buying it as it reverses using a buy stop, saying, and this is just an example, and we'll go over it after the gold. If we start to have some type of reversal or rally to the long side, then we look to get in using a buy stop, not buying without a reason. So that's what I'm looking at going into tonight, and maybe there will be some type of decent setup. Then you buy bottom on the bull dip. Not sure what you mean by that. We're going to continue to watch this gold. We'll see if this is going to sell off down below 20, or at least test this, or if we're going to bounce back up into these 30s. Because we could very well just pop back up in these 25, 30s and then stay here for a little bit. But it was looking pretty bearish. It was looking relatively bearish on these higher time frames, to where we could see a sell-off. Because this, even on the 15-minute, you can see that this was support, and we broke through it, and the support is becoming resistance. So it wouldn't surprise me if we do see a sell-off in gold tonight. Maybe not during slow markets, but if I wake up tomorrow morning and we're closer to 2,500, I wouldn't be surprised. Does your bias change depending on months? End of September usually? No, my bias doesn't change depending on the months. You know what? I don't know. I don't think that's a true statement. Maybe it depends on what's going on in the month. I think that is more accurate. My bias can change depending on what's going on. For example, like the Christmas rally. Everyone's talking about the Christmas rally. And so sometimes you could get a little bit bullish more around that time for different types of markets. And then near the end of the year, there's different occasions throughout the year that my bias could change regardless of what's actually happening to the markets. But that's really more in depth. Yeah, AKA seasonality can change it. So I don't want to go too far in depth, because a lot of what we're doing here, 99% of it is technical analysis. Technical analysis is what we're watching tonight, and what we watch when we're scalping here and we're trading here at Topstep. What do you think about ES overnight, long or short? My ES analysis is basically the same as NASDAQ. I kind of look at the ES and the NASDAQ very similar. They are very similar a lot of the time. I have not looked at ES as much as I probably should during slow markets. This is my favorite time to trade. So everyone who is new, this is my favorite time. And I'll show you the way I trade after this gold. After we watch some volatility come in at 8 p.m. and see how gold reacts, then we'll talk more about how I actually love to trade slow markets. It's using a higher time frame, and it's using pending orders that, sometimes they get triggered while you're sleeping. Sometimes they don't get triggered at all. But it's more of a slower, less, I don't want to say less mentally exhausting, but it's a slow pace, right? It's called slow markets for a reason. We're definitely not scalping in and out really quick. This gold at 8 p.m. is probably the fastest that the markets will move at this time. Of course, every once in a while we get some crazy volatility because of some news event or some earnings, which we obviously seen at the beginning of the month. We've seen huge moves at the beginning of August. Do you use the tilt filter on Topstep X from Biased? I do not. I do not use that. However, it's been interesting to see how it plays out. Richard Harris, you are in timeout. Yeah, I'm staying away from all of that. I 100% stay away from any drama. You guys and everybody could have their own thing. I'm here to 100% like pure education and answering questions. Slow markets is great transitioning from micros to minis. Yeah, I typically like micros in these accounts. I really do like micros. And we're going to go over examples. We've went over a few examples last week. They played really well. We're going to continue to do examples. And then at the very end of class, we'll look at a few trader statistics. So, as I go through this, I have my own channel in the Topsteps Discord where I will review a couple trader statistics at the end of the night. I'm not going to be, spending as much time because, everybody here is looking for a lot of trade strategy. We're going to be answering some questions. We're going to be going over, slow market trading strategies, and then spend just a little bit of time on, one or two trader statistics. Not as much as it was. It was fun. We was able to get through a lot and learn a lot. But yeah. And there's Danielle. Danielle's in the chat. Putting in extra time. It's supposed to be holiday, Danielle. We hopefully everybody had a great weekend. I know I did. That's for sure. We're seeing a little bit of spike in volatility. We'll zoom into a 1 minute chart and let's watch it. So typically the way we've been trading gold at this time is waiting for the initial move. And after we get the initial move, we've been looking for a reversal. So initial move, 10 minutes after 8 p.m., then a little bit of a reversal. Great way to wrap up your weekend. Yeah, prepare for a very busy week. It's always good. And then the week after that's going to be even more crazy. Yeah, I don't know if someone let the cat out of the bag yet, but I'll refrain to giving out too much outside of what we all know. And that's going to be, which is absolutely amazing while we sit here and watch gold, is that I don't know if, you guys might not have seen this, but Linda, who wrote the book of Trading Sardines, is going to be on Topstep tomorrow. And she's no joke. It's a huge, heavy hitter where she had a hedge fund that was ranked, 17th out of like the top 4,500 for best 5 performance. So yeah, it's no joke. Topstep continues to get these, big players in the financial industry on TopstepTV. And I think she was even a market maker for 40 years. Correct me if I'm wrong. Am I wrong? She was a market maker for 40 years. So they know their stuff, right? It's not just some random person coming on and talking BS. It's somebody who has been in this industry, and that's what I continue to preach, and I'll continue to say. That is one of, if not my favorite things about Topstep. Hogue, Eddie, MP, built by traders for traders. You don't have that anywhere else. I mean, maybe you have one or two people, but it's not an entire, like, everybody here knows trading. And man, sit here and listen to their stories is it's something else. If you don't learn anything, and if you don't become a good trader watching Topstep TV, I mean, it's worth it just to hear some of the old trading pit stories. Yeah, she might explain to us how stop hunts work. But get her and Hogue in a room. Man, that would be quite the story. And while we watch, not so much craziness happening right now. We're at 8:03 p.m. We're getting a little bit of movement. We're pushing down to these 26s. I would like to see a bigger initial move and then get a reversal. Richard, I love you. Oh, man. Yeah, that would be amazing. Hogue's, yeah, I mean, it's Topstep second to none with the level of expertise, and Richard is, and even our community is second to none. Everybody in here, where we have traders from around the world, traders, I mean, we even have people that come from the floor. I know Hoop's amazing. He's now community, right? Coach Hoop is there. You can see, is that a profile picture of your floor jacket, Coach Hoop? The amount of experience that Topstep has at their disposal is just mind-boggling. While we're waiting, it's a little bit boring here tonight. Yeah, there you go, Coach Hoop. I do. Let's see if we can break down. We're starting to sell off a little bit. We're starting to sell off, 25, 26. We're kind of looking for that reversal in about the next 5-6 minutes. But we are getting that sell-off. We are getting the sell-off. What were we looking at? We were I think the 22s. Were we seeing the 22s? No, we were actually, 22s, 24s, maybe somewhere in this zone. This is kind of a big zone. 23s, if we get 22 and a half, looking for a reversal down here if it will allow us. Now, it doesn't mean that we can't just sell off and sell through it, because we don't want to just be buying for no reason. We're going to wait for the reversal because remember, we can still see, and what our analysis was before looking at this is if we start to sell through, and if we do, we can even see these lower teens come into place. 25, basically 25.11, 25, I mean, all the way down here to 25.06 up to where we're at 25.22. So, as always, when you're entering into a reversal trade, you have to be aware, right? We want to make sure our stop loss isn't good, and we're not just catching it, just buy as it keeps going down. On the reverse, right? If you're able to get into a short, then these would be your targets. If you happen to get into a short, looking for us to sell off, then yeah, I would love to see 25.22 as a target, and then maybe something even lower, 25.14, and then maybe on a stretch target 25.07. So those are the targets to the downside. But as what we were looking at going into the 8 p.m. Central is about 10 minutes after, so like 8:10 p.m. Central, we kind of look for a reversal to see if we get some type of a trade. That's how it was playing pretty well last week, so we'll see if we could get one going into this week. Coach Dakota, are you going to accept the challenge? What challenge? Okay, that's the second person I've heard on a challenge. Did I miss something? I was out of phone service for three days. So you lose phone service for 3 days, and there is a lot that probably happened. Trading Combine. I've passed Trading Combine challenges. See? I got my combines. I have my live account. Yeah, this is a pretty slow market. It's a holiday. It's a holiday. Holidays, you can see a very, very slow markets, which we're seeing here. Everything's really slow. So we'll watch gold. We'll continue to watch gold because we still have a few more minutes to see if there is going to be an opening, a reversal at 810. Let's go through this. Let's take a look at NASDAQ. Let's take a look at NASDAQ. I might just end up getting into a NASDAQ trade. Let's do that. I do like this setup on the NASDAQ. I'm going to go ahead and take it. These are going to be micros. Man, that doesn't happen all the time. That was in a combine, so it wasn't me that pushed the market. Yeah, I'm going to switch this to ticks. Wow, that doesn't always happen like that, everyone. It's just never that good. So as let me explain this, okay? Because that happened fast. This happened really fast. So give me a second. Let's explain this. And I'm going to explain this, and then we'll go through this trade. So this is the NASDAQ. This is NASDAQ micros. And what I'm looking for. Now, remember, I got into that really quick, and I know it happens. Sometimes trading can happen really fast. We had this, nice sell-off, and we started at the bottom. And the way that I'm looking at this on a 5-minute chart was we're making higher lows. We came up, we made an equal high. We tested 598, and then I'm looking for a push back up to 19,600. And here is why. So if we zoom into a 1-minute chart, and maybe we could even make an argument to have a little bit wider stop, because this could turn into a slow markets trade. So what I'm seeing is this is a very interesting, there's some support and resistance here, and there was some support and resistance when basically yesterday in the morning, and we're at that same level again, and it acted as resistance once. We tested again, and it looked like we was making a higher low. And so I'm going to zoom in. I'm going to continue to explain this as well. And there it is. There is the low. And, ever since then, we were making these higher lows. So higher low, we basically consolidated, had a run of liquidity right there, higher low. And we had that big push up to the 598. And sure enough, there was some resistance there. And we came down, we tested it, we consolidated. We were consolidating right there. And I pulled the trigger as we were breaking out of that consolidation. And it happened really quick. You might have to go back and review that, right? It's on YouTube, so it is recorded because it did happen really quick. So we were consolidated there for basically 3 or 4 minutes, and then it was an entry for a breakout, looking for us to break above this level because this is a key level of resistance. If we break above that, the next area that I could possibly see us getting to is there's a lot of support here. So maybe we could see 612s. Maybe we could see 612s on this. So let's go ahead. I'm going to mark this out, and this could be our trade for tonight instead of gold because this one's at NASDAQ, MNQ, micro NASDAQ is moving. I got into 4. So let's go ahead and we could use this one as a journal entry. So let's do it. And we'll do the same scenario that we've been doing, but instead of doing it on gold, we're going to do it here on the NASDAQ. Let me clear everything and let's go through it because NASDAQ can definitely be pretty fun. So let's do that. I'm going to go ahead and put an aggressive trailing stop here because to me, to be pretty aggressive, maybe even that would be a good stop right below that pivot. So let's go ahead and do that. We're going to go, and forgive my spelling. I always misspell it. Same time all the time. So aggressive stop is going to be minus 20 ticks, minus 19 ticks. So let's go ahead and do that. And then we'll just do the normal stop, 73 ticks. Man, maybe we just even put that as the normal stop. Let's just see. I'm going to get it marked out, and it will give me time to just add everything, because I'm still a little bit slow on getting this. What is that? 73 ticks? Pretty wide. Pretty wide. And then the take profit, the first take profit I see is going to be plus 73 ticks. Plus 73. So I'm going to go ahead and put a sell limit 1. And I'm going to mark this as our first take profit, because that's a 1-to-1. I mean, it looks like a pretty good trade. That's a 1-to-1 trade, and that's typically what I like on a breakout trade. So first take profit plus, what is it, 73 ticks if it's a 1-to-1. And now let's watch it. Let's watch it play out. We'll do the same thing that we do on gold, but this is just on Bernie. Yeah, I could do that. I get flagged on YouTube. Aggressive stuff. Yeah, let's watch this. Let's watch this play out. The aggressive stop plays pretty good on gold. Let's see how it plays out tonight on the NASDAQ, because we're pushing 98s. Pushing 98s. It looks like we didn't touch 600 even. We hit 599 and a half. And there it goes. There it goes. Now, here's the question. Is this a run of liquidity and then a reversal? Because this is the hot spot. This is where you get a little bit nervous. Now we're getting follow through. We're getting that follow through. So let's go ahead. We're going to move our normal stop now. We're going to just normal stop this, and we're going to just watch my horrible drawing. Normal stop is now there. All right. Okay, that's our normal and our aggressive stop. Bear with me. Come on, guys. Oh, coming off of a holiday, that's for sure. Now let's watch this. This is where it's a little bit nervous, because we want to see, I like to see 2 or 3 candles. It doesn't matter what time frame. Now we're starting to see it. We're getting that continuation. I'd like to see us hold above this. We've broken into these 600s. And now if we hold above this for maybe 1 or 2 minutes, then I'm going to be very confident that we get up to at least these 609s. At least a test for our first take profit. Our second take profit could be at these highs around 620. So let's go ahead and do that. Let's see if we could do it. Come on. Oh, it just sold at market 1. So I just sold at 1. See, that's another human error. So I just sold at market 1. So I got to do this. I got to mark that one. Dang it. That's not what I wanted. I wanted to do a sell limit. That's what I wanted to do. Well, dang it. See, I continue to make mistakes. Well, that's now our first take profit, because I just sold at market 1. That one becomes our second take profit. So the first one we locked in 50, I'd say 50 ticks. All right. The second one is going to be 73 ticks. This third one is going to be around, 124 ticks? Yeah, do you see how much different this is than trading gold? It's more volatile, right? This will be our third. What was it? 132? Really volatile. We'll do that. We'll see if it gets there. That should be good. 1, 2, 3, and then we'll keep a runner on. 124. Wow, my math was way off. There we go. And then we'll keep a runner on that. And we'll see how the trailing stops work on here. So first take profit, 50 ticks. Our stop loss is already minus 19 ticks. And now let's try and find an area to trail this up. And so I think this will be a decent one to trail it up. So immediately our stop loss, no, I don't want that to set top. Let's see where that would be. 14 ticks for our regular one. So we'd already lock in 14 ticks for our take profit. Don't want double spelling. I mean, this is not too bad for a slow markets, right? This isn't too bad. I mean, what is this? 15 points? 20 points? If this was during the New York session, that'd be probably 50 points during the New York session. Why not add instead of do an aggressive stop loss? Because that's the position we want, right? This is for education. I mean, you can add if you want, right? If we get a pullback and then maybe we come and test this, right? This was resistance. Maybe we come down and we test and resistance becomes support. And then you could get into, maybe you could make that argument. Do we add if we do see resistance become support for a continuation back up? Yeah, that's fair. Sometimes I do that and it's reasonable. But for this one, nope, we're just going to go ahead and do an aggressive stop loss, and we're going to trail this up. In gold, the aggressive stop loss has been really well. This normal stop loss has been, it's been okay. Sometimes it outperforms, but more times than not, this aggressive one has been. And then we'll journal it. We'll journal it as well. And I remember this combine is one that I'm only going to be taking trades during slow markets, and we'll continue to review this. So basically every trade I take in this account, I'm going to try and only take it during slow markets. So then we could all go through and say, hey, Coach Dakota, you suck, or, you're not a good trader. And everything you see, I'm going to do it. We're going to keep a journal every single night. We're going to go through everything every single night, and then we can analyze it. And I think that would be really fun. And hopefully it opens your eyes. I hope it helps a lot of traders or whatever. We can analyze it. Maybe we start to lose money, and then we can say what's going on. Is it our strategy? What are we doing? Are these different markets? And then maybe we can do that for the next 6 months, 5 months. So that way you guys know, hey, this is what he's been doing. This is how he's been, moving his normal stop loss, his aggressive trailing stop. Which markets are he trading? Is he trading the NASDAQ? Is he trading gold? How's everything being, managed in this account? And then we could go through and review the statistics. Take that by just a point, right? Maybe having our stop loss at the bottom of that wick or our first take profit at the bottom of that wick would have been better. Or this could be the pullback that we're looking for to either add at the pullback from the breakout. We didn't really get down for the resistance to become support. We'll see. We'll talk through and walk through it. You love that idea? Dakota, you can petition the team to add the daily levels for Nikkei. I mean, so there's the daily levels come from the Topstep team, right? Like Hogue, we have some amazing coaches and some amazing members who are putting information for those daily levels. I mean, the more people who suggest it, the better it would be. The more likely it would come. You want to see how to pass a combine? I don't know if we could pass a combine, but we'll see. I'll trade this. Like I said, I do this every single night, and we'll go ahead and do it on here. We'll do all these trades. Maybe we'll scale up, scale down, depending on the market volatility. But very realistically, this could have been 5 micros instead of 4. It happened really, really quick. And just to review, if anybody's coming, right, this was the move. We got into this pullback. We started to consolidate a little bit. And then as we started to break out of this consolidation, that was the trade. It happened really quick. I didn't even have time to explain it, to be honest. Sometimes markets move very fast. It's interesting. And so now let's see how we react right here at the 602s. So what I would like to see now is basically the same thing. We could just copy paste exactly this, right? A move up, a pullback, consolidation, and then a continuation. So let's see if we get that. We had this move up. So let's see if this is going to be a pullback, which we already seen. Let's see if we get consolidation, and then we get a continuation back to the upside. And so if you didn't already get in, for example, then what we'd be looking for is exactly what we're seeing to get in. So what we'll see, and this is a much smaller time frame, and we'll talk about the 100 tick. As soon as this trade's over, we'll see the 100 tick chart. So now we're getting a little bit of this consolidation, and so my new entry would be probably a break above the 606, the break above this 606 level. So I would like to see, and the reason for it is purely based on this candlestick. This candlestick that happened at minute 20 is the high of that one, and anything is so far consolidation. Now, do we break down? Sure, we could break down and come and test these 98s, but anything so far to the right is consolidation, and I personally wouldn't enter until we break above that, and then we broke out of this consolidation right here. We could pull down and make a new one. We could look for some type of reversal around these 600s. Now, this is a very, very extreme time frame. This is only a 1 minute. I typically don't trade the 1 minute. Let's look at the 100 tick while we're talking about the 100 tick, because you could also see it, right? It's going to be very similar, especially on this time of night, because things are a little odd in terms of the volatility. It's not normal. You can see the 100 tick is a little bit more, wow, that one's ugly. I might have to adjust a few things. This is a 100 tick chart. At this time of day, when the markets are very slow, the 100 tick and the 1 minute could be very similar. And so this is a 100 tick, and that's what we're looking at. So let's see. This is basically the same thing, right? On the 1 minute to the 100 tick chart, that's it. This is the consolidation that we're seeing, and a breakdown. We could see a run back down to 598, or a breakup is where we will see that continuation. 100 tick is just 100 transactions. Now these are micros, so micros are a little bit different than the minis. And now we'll watch it. We'll watch it. See if we get a reversal and a retest of this break. This is the break area. This is the break area. And the way I'm looking at this is, yeah, that's a reasonable stop. That is a reasonable stop. And what we'll see, maybe, we'll see if this resistance becomes support. We'll see if resistance becomes support. We'll watch it. We'll watch it slowly. How do you stop yourself from catching falling knives? You do not buy it until you get a reversal. So, for example, the knife is falling. You could say the knife is falling, and yeah, just don't buy it when it's going against you like this. You don't want to buy it as it's falling. You would want to wait for like some type of a reversal, a 3-bar reversal, maybe consolidation, right? So you could make an argument that it was falling, and then we start to consolidate, and then you buy it there. For this example, maybe right now, as the example, we're falling. Now that's the 3-bar reversal on the 100 tick chart. So maybe there's an argument that you can say that this is a reversal, and you get in long right there at 598. Now this can be applied to any time frame. I mean, it's technical analysis and the market's fractal, but that could be an example. Instead of just buy as it's going against you, you wait for consolidation and then get in as the market's reversing. You don't want to get in and try and say, I'm going to just buy, trying to be preemptive and get in early before the market actually reverses. You get in as the market's reversing, right? As you're starting to see it break and have these reversal, consolidation. But yeah, right now you could definitely classify this as a falling knife, because if you change time frames, say to a 5-minute time frame, it's just 1 bar straight down. And so the aggressive stop just got stopped out. So plus 14 on that aggressive stop. Honestly, I would have rather had that aggressive stop probably below that candle, this one, or somewhere below there. But that's okay. Minus or plus 14. And now it's reversing, right? Or it's not reversing. Now it's showing signs of reversal, right? Where we bounced right off the 95s. Now we're starting to consolidate a little bit. And so that could be an argument to buy if we break above 97, right? 97, 96, 75. And so you're trying to buy the market at a pullback, but you're not buying it as it's going against you. You're buying it as it's showing signs that it's reversing, right? So if you were just buying it, right, so far there was no reason other than maybe here, but then you have taken a loss. And so it just depends on what your criterias are. Yeah, this is very different for a slow markets trade. Or this isn't really a slow markets. We decided to take this one rather than gold. What's gold doing anyway? Gold sold off. Gold sold off down to the 22s, right? This is kind of where we were looking for that reversal in gold, huh? Let's look. Yeah, that's kind of where we were looking for the reversal in gold. Yeah, so this is it, right? This is another example is, how do you prevent yourself from catching a falling knife? Well, make sure you don't just keep changing time frames based off of what you think the market's going to do. You are consistent in your time frames. If you look at the 5-minute and the hourly, or the hourly and the 5-minute, or the 15-minute, 2-minute, whatever it is, just try and stay consistent, because this is a good example. On the 1-minute chart, you could see that there could have been maybe some opportunities to buy up here, maybe an opportunity to buy in the 24s, maybe an opportunity to buy on this reversal. Then we look at the 5-minute chart, you can't really see it. It's a lot difficult. We made it down here to these 25, the lower end of this, the 25, 22s. We've seen a very clear rejection so far where we, pierced. We've seen 21.1. We came all the way back up. And now there's a decent argument to say that we're starting to consolidate in this area. So instead of just buying it as it's going down, you can definitely wait. And if you're going to take a reversal and say your target's back up here, you can wait until we, maybe break some of these pivots and some of the market structure. Or you could even wait longer, right? You could wait and wait. You'd be patient, and you could change different time frames. Maybe you're going to look and wait to see if we can break this 25 level. Or maybe something I do prefer is maybe we get another push back down, and then you could look for a reversal, looking for a higher low. And so, yeah, patience is probably the hardest thing when it comes to that, because you don't want to miss out on the reversal, right? Because you could say, oh my gosh, if I would have just bought here, that would have been a beautiful buying opportunity, and I could have made all this money. I could have bought the bottom. Well, I mean, look, you could have done the same thing here, but you would have lost money, or the same thing here. It's just the more you have going for you in terms of market structure, higher lows, higher highs, the higher the probabilities. So for gold, yeah, I would love to see if gold comes back down to 25, 22.5. Then look for a reversal if you want to get long, or even wait for a breakout, right? Maybe we do wait, consolidate, and then you wait for a breakout if you're looking to buy this instead of buying a falling knife. Or you just do the opposite, right? Where you look to sell this. You look to get in short on the trend. Just flip the screen upside down every time we, have a pullback, look to short it, pullback, look to short it. But the question was how to not buy a falling knife, right? Or catch a falling knife. So here's an example, right? Now this is very valid, right? We had this sell-off. We had the reversal. Now we're having the higher low. And then the entry would be right there. That would be the entry. A break above that high. So this would be the higher low, right? Pivot. Here's a pivot. And then this high. And so the entry would be right there. Instead of just buying as it's going down, you're going to buy it as we go back up. So to me, that would be the entry. I mean, there's maybe an argument to get down here, but then it's just, we're on such a small time frame, and we're kind of threading needles at this point. But I think that's a good example, and you could take this into consideration in almost any time frame. You're waiting for the market structure to show that it's reversing, rather than wait and just preemptively just buy. Even though some scenarios it can work, especially when you're going with the trend. And right now, this, what we have on our chart, the trend is up, right? The trend is ever since basically from 47, 46, we've been making higher lows, higher low, higher low, higher low. So there could be an argument to buy at a area of support. So, sell off, buy it, sell off, buy it, sell off, buy it. And it also depends on how aggressive you want to be, right? How aggressive do you want to be as a trader? And do you have a stop loss? Are you just going to keep buying and buying and buying till you hit your daily loss limit? Or do you have a way to get out of this market? It has to turn around. That was a crazy short. Not sure what you mean on that. So now this one's just waiting. So far, the aggressive stop would have netted plus 14 after we've got a 50 ticks. So risking 20, locked up 50 ticks. If we had the aggressive stop, then plus 14 ticks. And now we watch and see how this does. We're coming up already into the second half. Man, time goes by so fast. Time goes by so fast. It has to turn around. Man, those are some scary words. Nothing has, trust me, there's been a lot of times where I've thought that to myself, where, what was it? It wasn't too long ago. It was the beginning, near the end of July, where the market just keeps going up and up and up and up. And I just, you just think to yourself, and I even had that conversation with David Green, where it's like, man, every bone in our body is saying, this market needs to have a pullback. It has to have a pullback. Then it just keeps going up, making all-time highs. And then the exact opposite. Then we just had that huge dramatic sell-off, and everyone's thinking, it has to turn around. It has to turn around. Then we start getting into the 17,000s, and it's the same thing. It's like, this market has to turn around. Yeah, sometimes it sucks. It sucks. It's a lot easier. It's a lot simpler to just wait for it to turn around and then get in after it's turned around, or as it's turning around, not trying to be preemptive at once, right? So that could have been a good opportunity, right? Higher low, get in here, but then you run the risk of this. This is a whipsaw. Or if you're trying to get in short, a break right where our entry is would be, possibly a good opportunity to get in short, because then we can say this was a failed breakout. And that was the trade. That wasn't much of a breakout. But we'll watch it. We're going to stick to this strategy, and we've already locked in, it says $20, but what is it, 64 ticks on the aggressive stop loss, 50 ticks with one, and we'll see where we go. Inverse head and shoulders. What time frame are you looking for? That's a head and shoulders. I mean, it depends on your time frame. Yeah, I mean, you could see that this could be a shoulder, head, shoulder, and then we sell off, right? Then we could look and say, we could sell off and break down. You could definitely see that. I mean, if you're looking for a trade, you will definitely find one. If you don't, you could just change time frames and then you could find one. Trust me, you will always find a trade if you are looking. There's always a way. Yep, there's always something here to trade. Trust me. It's not inverse. What is your head and shoulders? Let's see what time frame. Let's take a look at the 5-minute. Yeah, it's pretty messy with all the drawings. Let's watch this see what this trade does, because I don't want to mess these drawings up. I feel like I'm just continuing to play with this. Let's watch it. If we continue to consolidate, then I will move my normal stop loss up below this pivot, because if we do break out, I would like my stop loss moved to that pivot. But we'll see. We'll watch it. Right now, we're continuing to consolidate, kind of just hanging around this. It's a very slow markets. Again, guys, slow markets. Don't expect much. Do not expect much. And we watch and see. We had that breakout. Is that a bad thing? Always finding a trade. It is. It can be, Fire Jim. And if you are looking for the trade, then that could be a sign of being desperate, right? You could always find a trade, You want the market to come to you, where the trade finds you rather than you find the trade. So I'm going to go ahead and move my stop loss there. And I'll explain what I mean in just a second. So, for example, do you see how fast I entered into this trade? Is because I didn't have to look very hard. I was looking and say, okay, beautiful trade. We're making higher lows. We had a test. We tested this level. We got the pullback. We're consolidating, and we're getting ready to break out. The trade found me, essentially, right? And say, whoa, wow, there's a beautiful trade setup. Get into it. Or you wait for it to follow your rules, and you wait for the trade setup to match what you're looking for, and then you get in, rather than sitting here and saying, okay, I don't see anything, but let's do some more analysis, and maybe something else can come of it. So, yeah, I think there is definitely something to it, so that way you don't overtrade. And I think that can be said for a few house account trades that I've seen. And I mean, it's one of those, right? Where TopstepTV is there during the New York session, and it would be very boring if we trade the way that I trade, or some people trade, where we're only looking for one trade, and then there's no trades that set up that maybe we feel too comfortable enough to trade. And then we're just going to sit there and stare at the screen for hours and hours. Yeah, that wouldn't be fun at all. I mean, who would want to do that? Everyone, let's just all watch the markets and not trade together if nothing sets up. It'd be very boring. So we'll watch this, guys. Let's get to some more questions. Okay. All right. Okay. Yeah, this is, I can't get distracted. Now I got people sending me stuff from, it looks like social media, and it's pretty funny. There's some pretty funny stuff there on, social media. So it's never boring in this industry. I mean, since I've started at Topstep, I've never had a day where I'm just like, nothing's going on. There's always something. Why are you trading micros? It's slow markets. Don't blame you, Dakota. No, I don't blame anybody, but it is entertaining. Hey, it's better than watching a drama or a telenovela on TV or anything like that. Who needs TV when you have social media? For real. Yeah. Do you have time limit for holding trades? I do not, but there are a lot of great traders who do use time limits. Yeah. And typically breakout trades can be very good with time limits. It really depends on you as a trader. I'm not against using time limits. I mean, there's so many examples that time limits would have been great. I personally do not. I like to have the market tell me when to get out, and not taking into consideration time. Coach Hoops. Yeah, I've watched some of Yellowstone. That was pretty good. I actually went to the Tetons. I still need to make my way over to Yellowstone National Park. It's such a beautiful area. And slow market strikes again. We'll continue. Let's see. Do we have any good... let's go through a couple more questions that you guys sent. Do you ever DCA or just cut your losses? KB, so DCA is dollar cost averaging. The way it's used a little bit weird in the way that I've seen traders use it here at Topstep or in the futures industry. Typically, it's like a stock term where you buy some. If it goes down, you buy some more, whatever. I mean, yeah, it just depends on how you use it. So I would say yes. I think DCA is very valid, and it's a great way of trading if used correctly. For example, you look for support and resistance zones, and DCA can be good. For example, yeah, I'm trying to think of an example. I mean, I don't want to go through and keep changing my chart because it messes up these drawings. But if you were looking to buy a pullback, and let's just use this trade for an example. If you're trying to buy this pullback and you have your stop loss, let's say your stop loss is down here, and you see this pivot and it broke out, and you say, I want to buy, I want to get into X amount of trades on a pullback, and I'm going to use this as my stop loss. You can buy some. Say I want to buy, 30% here. I'll buy 30% here and maybe 30% more here. But then if we break below this, I'm going to be stopped out, and this is how much I'm going to be risking. That is perfectly fine and it's valid. I do that all the time. However, where it becomes more of like a moron trade and it's very, very difficult. Let me hurry and just get this out for 3 ticks. So where it becomes very, very difficult is when you just buy some, buy some, buy some, buy some, and you don't have a plan, right? You don't have a stop loss. You don't have a plan saying if it keeps going against me, do I just keep, adding to it? And then how much do you add? So you need to know how much are you going to be adding, and, where is your stop loss? And then what are you going to be risking? So it's perfectly okay. If you're going to risk $400 with X amount of contracts, then you can get into that X amount of contracts however you want. You could get it in all at once, right? 3 contracts all at once. Or you could scale in. Maybe you enter into one on a more aggressive note. You could enter into another one on more of a reversal. And then you enter into a third one on a continuation, for example. Let's have this stop me out, and then I'll go over it. So let's do this as a journal entry. All right, let's go ahead and cancel the orders. We're going to get, oh man, I was so close to that take profit. That's okay. So let's journal this one, and let's make sure we got our entry. I think this was our entry. So... And then I'm going to go over it because DCA is such an important tool. It's such a great tool if used correctly. Let's go for contract entry. So this one was like all. We got all. I got in all of them right there. So let's go ahead and journal this. Take a screenshot, do that screenshot, go ahead to this journal, go to these notes. First trade of the month. Oh, well, I guess I got to add it before I save it. Beautiful. Okay, let's get this. And I'm going to talk about DCAing because I do it all the time. And it's a very important subject because traders always ask me this question. Yeah, Ethan. It can work. It's just not as effective. It's more effective in stocks where you could just hold. It's longer term trading. It's a lot more effective in longer term trading than day trading. Let's talk about it because I did one on Friday and I made some good money on Friday. So here is the NASDAQ, and I DCA'd on Friday, and it was amazing because it worked out really well. So this is what Friday was, okay? And this is very important because I think this gives a good example of the correct way to. I don't like the term DCA. Because it's used relatively incorrect the way that I feel it should in like day trading futures. I believe scaling in and scaling out is more important and it's more proper because it's just I feel like scaling in and scaling out. In this case, what we're talking about is scaling in is a lot better of a term to use. So this was Friday. Okay, this was the trading day on Friday. Let me change it to say right there. And essentially overnight, well, first of all, we had that great trade on slow markets where we were getting in long on the breakout, and we ended up closing it at, 19,580. If you guys remembered, Thursday night, we actually placed a buy stop to get into a long, and it worked out really well. We had the stop loss at like 380, our take profit at 580, and that was another great trade. And I think it was, let's review that. Let's see, because I think it deserves. Where is it at? Is this Friday? Yeah, look, this was a trade. So 8 p.m. last night, we got in. We got in at 464, and we hit our take profit. So that was a great trade. And we'll go over more, see if we can find another entry or another trade setup for a slow markets trade. But let's talk about this. Friday, I DCA'd, and it worked out really well. Sometimes it don't work out, just like any other trade. Some work out, some do not. So this was Friday. We had a very bullish market. The New York session opened. We tried to break out. We tried to hold above 600. We didn't. We ended up just being chopped out. We broke down through this. And this is where, to me, the DCA came into effect. Mine was on the pullback right here. So what happened is we sold off. We tested the session overnight. Well, we didn't really test the session overnight low yet. Consolidated a little bit, and then we had that second push right around lunchtime, and we did not break the low. We held above this low. And so what happened was we had this huge rally. I'm going to zoom into a 1-minute chart because I think it's a lot easier to explain on a 1-minute chart. There you go, 1-minute chart. So we had this huge reversal and rally right around lunchtime. Okay, this is around lunchtime, a big move. I missed this. I was not in this. I missed it. I wish I would have caught it. And so for me, this is where I was looking to buy a pullback. Okay, we had this rally. To me, this trend changed. We had that sell off this morning, and we're still positive because we were holding above yesterday's low, and we're still positive for the day. So I was looking to get into a long position. We got the initial pullback, and I'm going to explain this in detail. So originally, we got this first pullback from basically 499. We pulled all the way back to 466. I did end up getting into a long right there. So this was my first entry. So first entry right there at 467. Okay, we rallied up. I thought we was going to break on that one. We didn't. Oh, my stop loss was down here. I think it was below this pivot. Yep, it was below this one. So that was my stop loss. It was below either one of these pivots. I can't remember. It was on the wider side. So let's keep this. I'm going to put that intact for my stop loss. So I'm going to do it on the most extreme. I don't think I was risking 50 points, but let's just do this as an example. Okay. I wanted to get into 5 contracts. 5 contracts. These are minis. So I wanted to get into 5 minis. This was my first entry. 1 mini was there. My stop loss was down here. We continued to sell off. I ended up getting into another one, right? So I got into another one. It wasn't all the way down here. If I remember, it was somewhere right at the bottom of this. So maybe it was even a little bit lower. So this was my second entry on a mini. Stop loss was the same. We ended up pushing back. I got into a third, and I think it was on the top of this candle. So this was my third entry at the top of this, right? Because you guys see the way that I like to trade. I like to buy at support and resistance. And then we reversed. I did not get into my fourth. I think I probably should have, based off of this reversal pattern. But I was looking at the 5-minute chart as well. I'll show you what it looks like on a 5-minute chart. But sure enough, we went up. We didn't break out. We pulled back again, and I didn't add here. I wish I should have. I ended up adding here. So I ended up adding to my fourth contract. So my fourth contract was right there. I remember this break. So that was my fourth contract. And then I added again to a fifth contract. My fifth contract was the break of this contract. So that was my fifth contract. So I added 1, 2, 3, waited. I didn't add to here. I was thinking it was going to stop me out. We reversed, and then I added to my 4th, added to my 5th. So technically, I mean, do you call this DCA? I was scaling in. My stop was down here. I don't know if it was exactly at 411. It could have very well have been a lot closer because I did know it was getting close to my stop loss. On the 5-minute chart, it looks a little bit different. You can see how it looked on the 5-minute chart. So my stop loss was either here or below this pivot. It came really close to my stop loss. And then I was buying as we broke out. And then I didn't hold it this entire way. I didn't hold it. Let's look, shall we? We could probably, I think I ended up taking profit right here. This was my take profit. I'm pretty sure it was. It was around the bottom because we had this resistance. And so I'm pretty sure I took profit right here. Of course, I wish I held it through this entire move, but I didn't. There's no way. And the market was not telling me that we're going to rally all the way back up here. We just came up to test this resistance. And I was looking for this support to become resistance. So I was closing it right here. Unfortunately, that would have been nice to hold it up to how crazy that power hour at the ending of the day was. But that is the way I like to dollar cost average or scale in. I want to get into 5 contracts. And I want to get into those 5 contracts in a zone, and I like this zone. And then obviously I liked it even more as we started to go in my favor when it started to look more like a shoulder, head, and shoulder pattern. Like this is a shoulder, head, shoulder, kind of like a reversal pattern. I mean, however you want to draw that shoulder, but that's what I was looking at during power hour. That doesn't, maybe this is the neckline. Maybe that's the neckline. I don't know. Whatever. However you want to draw your technical analysis. But that is an example. You could, essentially do the same thing. If I was to look and do that again, I probably would have waited. Let's see. Yeah, I would have waited for this. And this is another good example, okay? This is a lot better example. If we had this breakout, and then trying to buy the pullback. So we broke out. This major resistance becomes support. And I'm looking to buy the breakout. And my stop loss would be probably either here or here. And then I would look to just add, right? Maybe I add one here. Maybe I could add one, like maybe down at a test for a double bottom. And it fails, maybe I add here, and like everyone to each their own. You could probably find different ways to add, but I have my stop loss. I know the trade, the valid. Getting in a pullback, you could be aggressive, you could be more patient, you could add as it's going in your favor, you could add as it's going against you. Add however you want, as long as you stay consistent, as long as you're able to understand this is my stop loss, whether it's below here, 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 here. This is how much I'm willing to risk on the trade, and then how big is my entry. This is performed a lot better using micros, right? If you're doing like 3 micros, 3 micros, 3 micros, 3 micros, 3 micros, and you have 5 times and you're only going to look to get into 15 micros, then yeah, why not? That makes a lot more sense, and it's a lot easier to do it because you're not, very emotional getting in, because doing it with minis, it's a lot harder. It's a lot emotionally harder because you're seeing the dollar amounts fluctuate a lot. So yeah, scaling in is a very beautiful tool when done correctly. And I think that's where I'm going to end it, because I have a lot of passion when it comes to that. And you guys know and see how I trade, and it's all the same. I love scaling in. I love it. I think it's such a useful tool, because as traders, you can definitely use it in your favor. Or, I mean, why would you not, right? Why would you not use a tool like that? Oh, wow. Yeah, gold reversed. So there's a good example, right? I mean, talking about gold, I wish I would have entered into that gold reversal trade. That could have been another example. And instead of just getting in 1 micro, we could have went to or mini. Instead of getting into a mini, we could have just got into 10 micros, right? Where We are looking for the market to reverse, maybe around this level, around the 22 level. And it's hard. It's hard to know exactly when the market will turn around. So you can easily get in. Maybe we got in one here, a couple here. Maybe we got faked out on the break, and then our stop loss is going to be below 21. Where is their stop loss? Yeah, maybe our stop loss is below this, right? And then we use some type of way to get in. Maybe we're able to get in at the 3-bar reversal there. Maybe we get in on the breakout there. Maybe we get into some more on that. And then we add to it, say there, right? So maybe you get in as it's going in your favor. And look, it did make a higher low, right? That was more probable, waiting for that pullback, make that higher low, and then look for that continuation. So anything else? Yeah, here. Let's look at one more. We're going to look at a trader statistics real quick. So hope you guys don't mind. I think it's only fair. Really need some advice. So this is a trading combine, and I just want to touch base on this really quick, and then we'll get to some questions. Immediately, what I see, you have great risk reward. So great risk reward. Keep that up. Maybe be more patient. Lower win trade percentage typically can be maybe you're a little less patient. Maybe it looks like you sized up. Right? This is a combine. Looks like you're struggling. Boom, made it all back on one day. Maybe you traded too big of a position size. Let's take a look at that real quick. It's very hard to give advice on this in this sense. Let's take a look. Yeah, it looks like you just went 5 contracts in. So I don't really have too much advice. Try and stay consistent. Stay consistent. Keep it up. I mean, you don't have enough trading statistics to really analyze it. So this is a good note. Not too much of trading statistics. You can see that one day can make or break a strategy. So if anything, don't blow your account on one day. One day can make or break an entire account. See how it's nice, small, consistent, and then one bad loss, make it up in 2 days. That's good. You're back pretty close to normal. Trade small, trade consistent, and then you could scale up as you gain the confidence. Typically, I don't like to see traders scaling up until they have the confidence and the statistics to go through. Do the opposite of what you think. Sometimes that's valid, right? Doing the opposite of what you think can be very, very valid. Look, scaling in on this pullback could work, right? Because now this is looking more of a bullish flagging pattern, right? This could very well be a flagging pattern. If we break up, then yeah, scaling in. How do you get all in on this trade? It's very hard. If you look to get into 3 contracts, do you just get into 3 where? To me, it's always easier to scale into trades. Can this go overtime? No. I'm going to go enjoy the rest of my evening, probably get some food, prepare. I'm on TopstepTV tomorrow morning during fast markets. Now remember, tomorrow's Tuesday. Don't forget, Linda, the author of Trading Sardines, is going to be here tomorrow at 11 a.m. Central. Don't miss it. I'm excited. This is one I'm very excited for. I know I say about the trading psychology and that, which we all need to work on. But this is someone, and this is on that level of where I'm very excited. Outside of just working on myself, I'm just excited to hear from her, somebody who's been a market maker for 40 years. I mean, when do you get a chance to hear from someone like that? We have Hogue, we have Eddie and MP, which we get to hear the amazing stories from the trading floor, and we have that amazing knowledge. But a performance by Barclays Edge being the top, top 17th out of 4,500 from a hedge fund. So don't waste these opportunities. You get it for free. You guys get this stuff for free by just watching Topstep. You don't get that anywhere. Where else do you get this? Really being able to answer questions, being able to be there. I'm going to be there. I'm not going to miss it. It's exciting. I love it. And then tomorrow's already Tuesday. We had Nick Vertick, which is doing the Sundays. You guys know from that. Jay's going to be on with me on Wednesday. You guys know he's going to be doing At the Buzzer. If you haven't got that, tune in. Those are amazing. And then of course D in London. So other than that, everybody, I will see you guys bright and early. If not, we didn't get to a slow markets trade, but you guys know my opinion. You guys seen the way I was looking at the NASDAQ. I'm looking for the NASDAQ to have a good chance and possibility to see if we could break above into these 700s. Maybe we could break above this tomorrow. I'd love to see it. I would actually love to wait. I want the market to wait for me in the morning when we could get into a good house account. Maybe we get into a house account trade and we break it tomorrow. That'd be cool. Or not. Maybe we just sell off and just get right back down into those back down to the bottom of this consolidation. Who knows? But until then, I will see you tomorrow.